Hey everyone, I'm just making a video response to this morning's article. I'm sure it's in all of Canada's establishment media outlets. It's Stephen Polas, our central banker, the head of the Central Bank of Canada, is coming out with this dire warning about Canada's economy and what the results are going to be. And I think it's Tuesday when the GDP figures come out. Anyways, just trying to talk up about let everyone know how bad things are in the economy, but more or less also setting it up to let Canadians know. But don't worry, we can intervene. We have methods, we have means to try to fight reality, is what I guess they're basically trying to say. I'm just going to read some caption from the article here. Stephen Polas is warning that Canada's economy could miss even scaled back expectations in the early part of this year, and has hinted the bank could implement extraordinary measures to fight the slump triggered by a collapse in oil prices. In an interview with the UK's Financial Times, the Bank of Canada governor said the first quarter of 2015 will look atrocious, because the oil shock is a big deal for us. Obviously it is. Yes. If the oil prices go down for the people that are trying to make huge profits off of oil, it's a big deal for them. On the other hand, and yes, it will affect some of the workers, some of the employees in the oil field, but in reality, is lower oil prices really a bad thing? Think about it from a consumer perspective. Think about it from the taxpayer. Think about from the person, even the people that work in the oil field. You tell me that they don't wish that they could pay a lower price for their oil? This is just a bunch of nonsense. This is the thing about crony corporate or capitalism, where you just got government and business in bed together. You try to talk about market forces, but it's fantasy land to even talk about certain things like supply and demand and this. Everything is completely manipulated by central banks and central governments to the point where you could give give an opinion from all sides of the coin, and every one of them would have a little bit of validity because they're all full of shit. So let's think about this for a second. How does Mr. Polas here? What is he suggesting? What is he suggesting would be a measure that they could take to hopefully help stave off some of this economic downfall? Let's see. Okay, Polas' comments come days before Tuesday's release of GDP figures in January, which would give Canadians the first official glimpse of how the economy has been doing in 2015. Though Polas and many other economists have said lower gas prices would boost consumers, offsetting some of the damage to oil exporters, he suggests that may not work for Canada this time. In theory, low oil prices means putting more money in the consumer's pocket, but if an oil company cancels an investment, which is a project, laying off a worker, that guy will not have the money to buy a new pickup truck. That spreads pretty quickly, Polas said. The concern about oil price pain spreading to the rest of the economy has been on the lips of many analysts. Nomura Securities warned last week of signs of contagion from oil prices in other parts of the economy, and singled out construction, engineering, and Canada's banks as being vulnerable. Polas suggested the central bank could take actions beyond cutting interest rates if warranted. He hinted the bank could launch its own Canadian version of quantitative easing, the practice of a central bank buying up assets in order to flood the economy with money. Okay, you see, this is obviously another thing that really gripes my ass. How are you going to expect Canadians from all backgrounds? Not everyone is obviously an economist, right? A central banker. But the way they twist and distort the English language, it's done on purpose so that you can confuse the people that aren't into economics, that don't spend every day trying to learn the intricacies or all the political doublespeak language they use when talking about economics. But what he's really saying, let me put this in plain English for you. Quantitative easing, what a retarded fucking phrase that is, basically means we're going to print, we're going to write a bunch of IOUs, which, you know, are useless. Basically saying here, print up a bunch of money. We're just going to print up a bunch of Canadian money, and we'll write a bunch of IOUs for that money. And somehow all that extra money in the economy is going to, you know, perform miracles, and it's going to grow somehow. But, I mean, think about what they're saying. They're printing money, and that's going to stimulate the economy. Now, the U.S. did it to the tune of, I think it was for six years straight, where they printed over $4 trillion. The Federal Reserve bought up $4 trillion worth of IOUs and printed up over $4 trillion of U.S. reserve currencies to try to stave off the economic collapse. But if you look, after 6 years of doing that, of $4 trillion, which is, I mean, that's an insane amount of money when you think about it. But even after all of that, years and years and years of quantitative easing 1, quantitative easing 2, quantitative easing 3, there was the twist, there was all kinds of magic manipulation of money and currency, the monetary policy that was supposed to bring the U.S. out of the economic collapse. Well, if you look in the real economy, you can see that people are saying, wait a minute, I'm poor now, I'm not getting any extra wage increases, jobs are part-time or temporary. You know, most of the jobs you find are paying a lot less than they did even 10 years ago. And a lot of the jobs that come online are part-time, when most of the well-paying jobs that were full-time that are long gone past, they're never coming back. That alone tells you right there that there's no real boom in the economy as they suggest. Well, all it really did is if you print money and you're the central bank and the government, your crony counterparts, your big banksters, you know, and Wall Street or Bay Street, sure they'll take. I mean, you know, you're practically giving them money for free. There's basically like minimal interest. So yeah, of course they'll take all that. You know, if you hand these guys money, they'll take it and they're investing it in the stock market. They're you know, buying up assets to increase, you know, the value of homes and stuff. But it's all speculative. There's none of it that's going in to actually provide, you know, jobs, real well-paying jobs for the people in the economy. It's not helping people. I mean, sure, like, you know, if you're a boomer or one of the older people and your house is now keeps going up $10,000, $20,000 a year, hey, seems like you're getting richer. What if you're the, you know, one of these millennials that just come out of you know, post-secondary with $60,000 of debt and has to work in the food or service industry for a minimum wage job? Think about it. What are these guys going to do? How are you going to even try to attempt to get into a home when prices are that? It's not. You're not even going to attempt it at that point. So it's all about perspective when it comes down to really is, yes, certain people, you know, the pigs at the trough. Yeah, you know, you put the slop in there and it's going to head right toward them, and they're going to sponge it up as quickly as humanly possible and fatten themselves up. No doubt about it. But the ones that have no access, that are locked outside of that little pen, you know, the ones outside there, they're not benefiting in any way, shape, or form from all this you know, quantitative and easing, as they call it. It's printing money, which, I mean, think about it. Another thing, what does printing money do? The more you print, if you just print money, it makes it worth less, which is, as you see, and that's another thing too with this constant manipulating of the monetary system, is you're seeing our dollar go reduce in value more and more and more continuously. And that is a direct result of all of this speculation and printing money. And if you think about it, that money is actually not going to help anybody, because if you inflate prices, even if there's more money in the system, if the prices are higher, it's like the minimum wage. Even if you raise the minimum wage from $10 to $11 an hour, if everything else on the shelf or your, you know, whatever you go to purchase on a regular basis costs that much more, well, did you gain anything? No, of course you didn't gain anything. But like I said, there are some people that know how to reach in and take advantage of those gains. But the people that are going to be straddled with all these debts, they're not benefiting any in any way, shape, or form from it.